How did TSMC, a pure-play foundry, gain more than 90% of global leading-edge foundry capacity at 7 nanometers and below? It now sustains a 56.1% gross margin and plans 2025 capital expenditures of 38 to 42 billion. The story starts in 1987, when TSMC was founded in Hsinchu, Taiwan, as the world's first dedicated semiconductor foundry under founder Morris Chang, with early backing from the Taiwanese government and Philips. From the beginning, it operated as a pure-play foundry, manufacturing chips exclusively for external customers and not designing or selling its own branded chips. Economically, scale followed. In 2024, TSMC reported consolidated revenue of $294.31 billion, approximately $90.08 billion, representing 33.9% year-on-year growth from 2023 revenue of $2,161.74 billion, or $69.30 billion. Profitability matched that revenue scale. In 2024, TSMC's gross margin was 56.1%, and its operating margin was approximately 45.7%. Across the recent semiconductor cycle, margins fluctuated. Gross margin moved from 53.1% in 2020 to 51.6% in 2021, peaked at 59.6% in 2022, then was 54.4% in 2023, and 56.1% in 2024. Here's the problem. Industry analysts estimate that in 2024, TSMC had roughly 65% share of global foundry revenue and more than 70% share of pure-play foundry revenue. That share concentrates advanced production. Analyst and industry estimates indicate that TSMC controls more than 90% of global leading-edge foundry capacity at process nodes of 7 nanometers and below. Technologically, revenue is anchored at advanced nodes. In Q4 2024, TSMC's wafer revenue mix by node was 26% from 3 nm, 34% from 5 nm, and 14% from 7 nm, so advanced nodes at 7 nm and below comprise 74% of wafer revenue. For full year 2024, that pattern persisted. TSMC reported that 3 nm process technology contributed 18% of wafer revenue, while 3 nm, 5 nm, and 7 nm combined represented 69% of wafer revenue. Platform demand reinforces this tilt. In Q4 2024, revenue mix by platform was approximately 53% from high-performance computing, 35% from smartphones, about 5% from IoT, and about 5% from automotive. Here's their position. In full year 2024, TSMC's high-performance computing platform contributed approximately 43% of total revenue. Inside that platform, AI accelerators stood out. Management stated that GPUs, AI ASICs, and HBM controllers accounted for a mid-teens percentage of total company revenue in 2024 and grew more than threefold year-on-year. Looking ahead, TSMC is tying more growth to AI. It expects AI accelerator revenue to approximately double again in 2025 and to grow at about a 45% compound annual growth rate between 2024 and 2028. By 2025, the revenue mix reflected that shift. TSMC reported that its high-performance computing platform, including AI, accounted for roughly 57 to 60% of quarterly revenue, while smartphones contributed about 30 to 35%. Customer concentration rose alongside platform changes. In 2024, TSMC's top 10 customers accounted for 76% of total revenue, up from 70% in 2023. Analyst mappings of anonymized disclosures identify customer A contributing roughly 22 to 24% of TSMC's revenue as Apple Inc. The same reports identify customer B contributing less than 12% as NVIDIA, and the third largest customer contributing less than 10% as AMD. Strategically, the roadmap centers on the next node. TSMC announced that its 2 nm N2 technology is scheduled to enter volume production in the second half of 2025, with initial capacity ramping in Taiwan and further advanced packaging capacity being built in the United States, Japan, and Europe. The trade-off? This positioning requires sustained heavy investment. In 2024, TSMC's capital expenditures were approximately $29.8 billion, after initial guidance of $30 to $32 billion, and a later indication that capex would be slightly above $30 billion. That spending translated into notable capital intensity. In 2024, TSMC's capital intensity, measured as capex divided by revenue, was approximately 33%. Looking ahead, required investment steps higher. For 2025, TSMC guided capital expenditures in the range of $38 to $42 billion, with around 70% allocated to advanced process technologies such as 3nm and 2nm, 10 to 20% to specialty technologies, and 10 to 20% to advanced packaging, testing, and mask making. Recent operating results show how demand is tracking that investment. In Q1 2025, TSMC reported revenue of $839.25 billion, approximately $25.5 billion, representing 41.6% year-on-year growth. Momentum continued into Q3 2025. TSMC reported revenue of $33.1 billion, or $989.9 billion, up 40.8% year-on-year and 10.1% quarter-on-quarter, with a gross margin of 59.5% and operating margin of 50.6%. Next, the outlook. For Q4 2025, TSMC guided revenue in the range of $32.2 to $33.4 billion, with a gross margin of 59 to 61% and operating margin of 49 to 51%. Looking ahead, management framed 2025 as another strong growth year. The CEO has guided that company revenue in 2025 is expected to grow in the mid-30s% year-on-year in US dollar terms, repeatedly characterized as approximately 35% growth.